Islamic finance is a structure by which is established through the teaching of the Quran, the Sunnah, and the four A'imma, who are the Hanafi, the Hanafi, the Shafi'i, the Maliki. And Islamic finance, like any other science under Islamic law, it's derivative of the Quran, the Sunnah, and those four A'imma, and then Ijtihad, Ijma', which are the group of people that they decide and they have a fatwa as Ijma' for a specific principle, and also the Ijtihad. So Islamic finance came from the Quran, the Sunnah, and all of these. It began in the 7th century when the Islam came into existence, and at that time, obviously there were traders, and there was a trade between the people, and also between companies. At that time, there was a lot of riba, which was interest, where loan. There was a lot of loan that for people would lend money and get riba from it. And Islam came, what it did, it just forbid the riba, and it says that trade, and established trade as a way of dealing with each other economically, and that is in the 7th century. However, it developed in a form of a contemporary Islamic finance application in this world in the 20th century, starting in 1950, where some ulama they start talking about Islamic finance and how it can be applied in economic situations in the 20th century. And it developed into creating the Islamic Development Bank, which was created by the Organization of Islamic Conference in 1974. However, the Islamic finance became very popular and started really integrating in the economic system around the world in the 80s and the 90s. Islamic finances have grown approximately about $800 billion globally in 2010. So not only in the Gulf state and mostly Malaysia, in East Asia as well as the Gulf state. You have Saudi Arabia, you have Qatar, you have Dubai. And also in places like Malaysia, it's like most aggressive and most developed Islamic finance, and that demonstrates exactly the need for Islamic finance to be applied in this world economy. I really do believe. I think it comes to the system, the governmental system in those countries where Islamic law is applied more than in other countries. I'll give you an example. If you have North Africa, where Islamic law is not really applied as much, except for the wills and the trust and all of that, but in a general economic system, it has the roots comes from the Islamic principles in those countries, and that's what you see them. It's more developed in some countries and not developed in others. Islamic finance in the United States is not as developed as it is in Europe, for instance, in England. However, it's taking pace. It's really picking pace now. For instance, Islamic finance started picking pace in terms of house, the purchase of house, a real estate market, and you have many Islamic companies, Islamic financial companies being established in terms of those transactions. For instance, for ijara, for musharaka, mudaraba. You have also HSBC who get involved also in those transactions. You have La Riba, you have Islamic University Bank, you have Guidance, you have Zayan Takaful. All those companies are getting more involved in Islamic finance transaction. In terms of investment, you have something like a company like Satuna Capital who really get involved deeply into investment in equity and all of that. So it is picking pace, really it is. And a lot of Muslims, also it's growing with the Muslim community growing in this country. And a lot of members of the community, they feel that they need to address the issue, their obligation, moral obligation, and their Sharia. In addition, there are some, not only the Muslim community, but there are now, because it showed the benefit of Islamic finance, there are other financial advisors, and as well as many banks and financial institutions are starting to get really interested in this phenomena, which is especially after 2008, where the downfall of the financial system became, people start looking at the other options. As a matter of fact, Senator Parker, just lately, about 2 weeks ago, he just submitted a bill to his state senator to New York State to have sukuk as another option to invest, and he compared how New York, it's about, now it's 54 billion in investment, where he compared it to London, which is 1.4 billion, and he said that the difference is that because they have many options, and one of the options is Islamic finance. I think the major difference is that the Islamic finance, when you have the investors, they invest in any transactions. For instance, it has to be, first of all, it has to be based not on debt or in transfer of money, because that is forbidden. Obviously, you will have to be based on projects. And the project will be partners. So for example, in the Musharaka, you have two people, they get together and they say, we want to invest in this project. And then they will share the same risk. They will share the risk according to their contract, and then the loss, in terms of loss, and also the profits. Whereby, if you have the conventional, if you want to just invest and not get involved, you don't have to have the risk. And a bond it's a good example, as opposed to sukuk, which is an Islamic version of the bond, whereby in a conventional bond, that you will just invest the money and you just wait, and then you get at the end you will get whatever the interest and whatever. But in sukuk, you will also participate in the loss, and you can lose. Whatever you invest in, according to whatever is the structure, is either musharaka or ijara or all of that. And that makes it very interesting. And also the difference is that financial institution and conventional financing, it's based a lot on speculations. Whereby in Islamic finance, speculation, it's not, it's a garar, and which is forbidden, and then Islam, you cannot, and security of a project, it has to be really studied, and security is not something that you want to invest in, and that is forbidden because of what happened in 2008. That there's an example to tell you exactly that the Islamic finance has sense of security. In terms of you don't speculate the market, and you don't in terms of derivative, and you don't trade in debt. You trade in liquidity, and you charge in project-based trading, and depending on the second market or in the first market, whatever, it has to have some project behind it that you can say, I have the certificate, and you can trade it. I think the 2008 downfall really affected the world economy, and definitely affected the Islamic banks. However, I believe that because of the type of the risk that the bank takes with the investor or with the customer, make the bank very careful in trying not only to be a partner, which we are not saying lend the money, but we're being a partner with the customer in terms of trying to find out if that person has good credit, but also make sure that the project is a valuable project. It's a good project. That means there is security behind it, which means that there is well-defined project, and they become more of a partner in that project.